Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. I think the fundamental side of things is maybe pretty obvious what the driving story is today. We'll get into it soon, what the latest headlines are and how some of the movements are playing out with all the war tensions going on between Ukraine and Russia, and obviously all the NATO alliance nations and everybody else that's maybe connected in one way or another with the whole situation. We'll try and do an overview of that fundamental situation, and we'll take a look at the charts and see how things are moving and how maybe you can predict some things. As always, keep in mind, no one trade is guaranteed to profit. Any trade that you take has a risk of loss. With that said, each and every trade that you take also has the potential for nice profits. So you just want to make sure you're managing the risk side in a way that makes sense for you. There are different tools that you can use. We'll go over a few of them within the webinar that are available on our WebTrader and AvaTrade Go mobile app that I think can be very helpful as part of your risk management strategy and plan. As we go over the different concepts and ideas, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, what is fundamental analysis? Well, basically, it's looking at the news, the headlines, what's happening around the world. You can kind of break it down into a couple different types of fundamental news. There are regular economic events, not the big focus today. But there are regular economic events. We'll look at what's come in today, what is expected tomorrow, and then also the extraordinary economic events, which certainly we're having now with all the tensions between Russia and the Ukraine and all of the interconnected nations that are chiming in as well with sanctions and different headlines that are coming in related to the potential conflict or existing conflict, I guess we should say, between Ukraine and Russia. And so with that being the driving type of fundamental news today, maybe the inflation fears are on the back burner, but we'll still take a look at what's going on with maybe some inflationary numbers that came in again today and what's expected tomorrow on the economic calendar. So the idea here is once you get a feel for the fundamental news situation, then you can start to do your technical analysis and get into what entry points and exit points make sense for you based on the current fundamental news situation. Now, if we take a look at the headlines real quick, Wall Street slips as Ukraine declares emergency. We can understand why the Ukraine might be declaring an emergency with nearly 200,000 troops, I think was the latest number that was being talked about, lined up around 3 of the 4 borders of Ukraine. And as we take a look at the more than one source, Ukraine declares state of emergency, summons citizens home from Russia. Like many countries, there are people who travel across the border, maybe even daily for work or maybe temporary visits, that sort of thing. And I think that probably goes both directions. Russians coming into the Ukraine, Ukrainians going into Russia. So now there's fears on the Ukraine side that their citizens could get stuck in Russia, maybe become bargaining chips, that sort of thing, if all-out war breaks out here beyond the regions where it's already occurring. And so the Ukraine is, along with the state of emergency being declared, summons citizens to come back from Russia. And the Russians are busy, I believe, getting their diplomats and such out of the Ukraine as well. And so it's looking like a situation that could go from bad to worse. we don't know for sure, but that's what the markets are reading right now. A lot of fear on the markets. The day started out today, by the way, with some positivity. The markets were bouncing, cryptocurrencies were bouncing along with it, with some hopes from both sides that maybe there could be some more talks, that maybe diplomacy could work after all. But quickly that soured as the state of emergency was declared, and that's the situation we're in, where anxieties are high, fears can escalate quickly, and we see now the markets are all in the red here. The only thing green is the dollar index and the volatility index, otherwise known as the fear index. So fear is up again, and this has been, like I said, swinging back and forth through the day, with the fear index up and down, up and down. Now it's up again. Dollar index tends to rise when there's a lot of fear, and it's back in the green again, along with the volatility index also in the green. Now we look at some of the inflationary data. CPI numbers out of the European Union, as expected, above 5%, 5.1%, which is year over year consumer pricing index numbers. That's what CPI stands for. As expected, prices rising quickly. Hyperinflation, adding to the fears maybe, on top of the war fears. And so, out of the U.S., there were year over year numbers, 10% inflation on the producer side. And, that carries over when producer prices are up 10%. You can expect that to be passed on to the consumers. Retail sales could be affected, etc. So we're looking at more fear economically as well building. And what do you think happens if there's war, all-out war breaking out, if there are sanctions, more and more sanctions put on Russia? What happens to energy prices? Russia supplies a lot of energy, natural gas, etc., to the European nations and around the globe. So it's a real tense situation, and it's creating a bullishness maybe on the crude oil and natural gas prices as well. And if there's already inflation, what happens to inflation if energy prices go up? That makes the cost of doing business go up if energy costs go up, and what is already rampant inflation potentially could get worse. And so this is a situation that also, in terms of the inflationary fears, could go from bad to worse. And as we then take a look at the announcements coming tomorrow on the economic schedule, Bank of England, Governor Bailey speaks. It's probably not going to be something that's lacking tension and fear. When you're talking on top of the inflationary problems, now you're talking about war fears as well on top of it. So not the best situation for the markets. GDP numbers coming in the U.S., initial jobless claims numbers, new home sales numbers, and crude oil inventories of anything, that really is going to be in focus as well. There's already fears of energy supply disruptions because of the Ukraine-Russia conflict. Now put into there's no war would beg to differ. There's borders that have been crossed with tanks, whether Russia calls it a peacekeeping mission or not. Many others are not around the world calling it a peacekeeping mission. So certainly there are bombs going off and fighting and soldiers being killed already. So whether you want to call it a war, a peacekeeping mission, certainly there's conflict going on. I think most would agree with that. I know there are some members from Russia that are attending as well, and maybe your news clips are a bit different with what you're seeing and your opinion, and I respect that as well. Okay, so New home sales coming out tomorrow as well. So a lot of numbers coming out that certainly could create some more movement on the charts. So that's the fundamental news situation that we see. A lot of fear, a lot of anxiety, mostly being driven right now by the Ukraine-Russia conflict that's going on. You could call it incursion, you can call it an invasion, you can call it different things. Natalie, I'm glad you're back. I saw you got disconnected. I was just saying a lot of the verbiage maybe is different coming out of Russia compared to the rest of the world. Whether you want to call the situation an incursion, a peacekeeping mission, war, the fact is there's a lot of tension globally connected with it. And so that's the situation, and it's certainly in the headlines all around the world. And it's affecting the market and the movement on the charts. And so we're going to take a look at that soon. What we can take a look at is first the mobile app. Let me expand this. And in the mobile app, if you're making use of your mobile device, I recommend checking out the AvaTrade Go mobile app. If you tap on this tab in the lower right, like we like to do in the webinars to use some of the advanced features, if we take a look at the market buzz, since we're talking fundamental news, if you tap on market buzz, you're going to get articles for the most trending stocks. Okay, it's stock focused, the market buzz. And what you'll see are the most recent articles popping up for the most trending stocks. And so we see 214 news articles about Tyson Foods. And a lot of these stocks will only be on the MT5 platform. So you can, if you don't have an MT5 account, you can add it to your user account very easily, I should say. And so we can see the stocks there, Meta Platforms, that's the offshoot from Facebook, 148 articles. And so if you want to look at some of the articles and you say, okay, I'm interested in Meta Platforms. So I tap on that and it will load a general consensus about Meta Platforms. And then it'll also load links for the individual news feed for the different articles that are talking about Meta Platforms. Okay, so you can take a look, pull up articles that are mentioning it, that have something to do with it, and quickly get the most up-to-date fundamental news that's talking about Meta Platforms. Okay, U.S. Meta spar over date of antitrust trial. Only 54 minutes ago that came out. So if you're interested in that article, you tap on it, it brings up the article. Takes you to the website where that article is. And so you can get up-to-date news information regarding stocks, fundamental news right there at your fingertips. And then combine that with what you know about the fundamental news headlines that we just looked at. You can say, okay, there's fear on the markets. Then there's fear about Meta Platforms and antitrust suits. And you read the article and you get maybe a quick idea about the direction you might prefer to trade. Then you jump on the chart and start looking for your technical entry points and exit points. Okay, other tools here, fundamentally speaking, that are on the app and the web trader, by the way. All of these tools are on both. And you could trade right on your MT4, MT5 accounts from the app and the web trader using this information. So we can look at, let's say, analyst views and pull up signals. All right, so if we go into it knowing, okay, US dollar's been strengthening with the fear around the world, tends to strengthen over the other currencies. Then you look at the signals and you say, GBP USD expected to drop, it says here. Now, why would the USD drop against the Swiss franc if the USD is strengthening today? Well, because the Swiss franc is a traditional safe haven currency, even more so than the USD. So safe havens tend to strengthen when there's fear. So you look at the signals and you say, wow, they make sense. USD Canadian. Why would USD drop against the Canadian? Well, crude oil has been bullish with all the fear between the Ukraine and Russia tensions and fear about disruption of crude oil supply and natural gas supply coming out of Russia. So with those fears, that tends to make crude oil bullish. And the Canadian dollar is strongly affected by crude oil prices because the #1 GDP export of Canada is crude oil. And so many times if you see expectation of strengthening crude oil prices, many times the Canadian dollar can be strong. So fundamentally, you might look at this and say, okay, I understand these signals. They tend to make sense. And then you pick one that makes the most sense to you or that you're the most knowledgeable about. Okay. And so maybe we take a look at GBP USD and we think that's something we might be interested in. Perhaps you feel like there's problems with the pound. Maybe you have some ideas about that, and then you look and say, okay, the USD dollar index was strengthening a bit. There's fear, so maybe this makes sense. And so the signal breaks down the technical analysis for you. And as you look at the technical analysis, you can see that they give you the preferred direction, short positions on USD or GBP USD, gives you the target prices for take profits. It gives you the price at which if it goes in the wrong direction that the signal's no good. This is the bailout price. If the movement went above $36.20, they're saying, okay, then the sell position's no good. The preferred direction went bad. And then they say you think about maybe buy position if it goes above this blue line. So the blue line is the line that says if it's below that, the sell preferred direction is still good. In terms of the signal, if it's above that blue line, they're saying then maybe you buy. So the way you can use this signal is, okay, if fundamentally you agree that, hey, the pound should maybe get pulled down against the USD now with the fear on the market, then maybe you sell with the market with take profits at these suggested prices. And then you back that up maybe with a pending order that if the move does go bad and it goes above this blue line, then the backup move is a buy position, a pending order to buy if it goes above this line with a take profit at these prices. And that's the alternate scenario that's outlined right down here. Okay, alternate scenario to buy if the price breaks above $36.20 with take profits up at these suggested prices here, $36.40, $36.60. So this is the way I would suggest you can use the signals is to outline the fundamental news situation first, and then look for signals that make sense to you based on your understanding of the fundamental news. Okay. What we can do then is let's go ahead. We'll get out of the app. And let's go to the full screen web trader platform, which has the same features I was just showing you, but on a full screen. So if you like to trade rather than from a mobile, if you like to trade instead on the full screen, then you log in here. Log in from the main website, and you should be on our web trader platform. It might have signed me out because I left it sit for a while, which is a safety feature, by the way. It's good that it logs you out if you're not actually using it. That way someone else wouldn't stumble upon your account already logged in. Looks like my internet is giving me a little delay. Here, I'll just log in from this one. My test trader account. My quote unquote dummy account. All right, so looks like I have an old position running here. Let me close that off just to clear things. And let's take a look at that maybe Euro Canadian. And why might we look at the Euro Canadian? Any ideas? Why would we maybe look at the Euro Canadian, fundamentally speaking? Lavkesh, you're asking, how do you get these reasons for changes in currency pairs daily? I say check the headlines like we just did. Go through the process we just did and get a feel for the fundamental news, what's happening. And then you go into the signals if you want to make use of the signals that are provided there in the app and on the web trader, or find your own price levels and start to dig into what looks like an opportunistic entry point or not. Okay. All right. So if you want some help with the MT4 platform, talk to your account manager. We tend to focus on the WebTrader and the AvaGo app. But if you have any specific questions, I can help you in the webinar with the MT4. But your account manager, if you have one assigned, can help you one-on-one with more specific items. What we're looking at then is USD or Euro Canadian here. Yeah, Lavkesh, I would say a lot of the markets, a lot of the instruments are affected by the energy situation, that's for sure. And USD Canadian is no exception, and actually is probably a good example of one that's strongly affected by the energy sector. Now, I purposely pulled up the Euro Canadian here, and the reason being, with all the fear on the markets, the euro could maybe be weakened a bit, as the euro tends not to be a safe haven currency, and the Canadian you'd think could be strengthened. Okay. Because of the potential for oil prices to go up if there's a larger escalation of this conflict that's occurring. So if I go to say 2-hour candles, I see that the euro has already been dropping against the Canadian. Okay, and we understand fundamentally speaking why, right? Euro has pressure because the European Union is definitely being affected by all of these stresses about potential war involving the Ukraine, and the Canadian being bullish because of expected potential price increases in oil. So we see this sitting on a support level here. We see support, back up, support, back up. So one thing you could do is have pending orders. If the euro finds a way to bounce up, you could have pending orders up here at a price that you like, ready to sell from a higher price. If you think the bigger picture is crude oil prices will eventually shoot up further, if that's how you feel from this potential escalation that could occur between Ukraine and Russia. So you could start zooming in on smaller candles, looking for price points that you might like. And so I drew a line up here. You might start to look even closer and say, boy, if it even comes back up to these high points here, might be a spot you would be looking to sell from. Okay, an opportunistic spot. So we could start putting pending orders saying sell, execute when price hits. If it hits 144.15, then you might say you want to sell with a stop loss above maybe this resistance level up here or here. Okay, there's a resistance here, old support. So you might start to say, okay, I'll put my stop loss up at 144, let's say 30, something like that. 144, 30, so risking 15 pips. And the take profit could be, if we go to larger candles, back down just before today's low. So that might be, and that's above that bigger support level that we were looking at on the larger candles. So 144, or I'm sorry, 143.80 potential take profit. So now we're looking potential profit, more than double the risk by being patient and hoping that it comes up to a better entry point for you. And then you start to say, okay, what trade size would I want to take? You have to first determine, well, how much do I want to risk per trade? And remember, I mentioned there's some risk management tools built into the app and the WebTrader. So you see in the order window, it's calculating your possible loss, your possible profit before you ever put the order in motion. So I can say, if I know I want to risk, I don't know, 250 per trade, whatever it is I know I want to risk. Now I can say, all right, I see the possible loss here. So let me adjust my trade size to maybe one full lot. And then I see, okay, my possible loss is 117. So I say, okay, 2.2 lots. Now I see my possible loss is 259. If I know, give or take, I want to risk about 250, that's pretty close. If I'm happy with that potential exposure to stop loss price and my possible profits calculated, then I'm ready to set that order in motion. And so it's not an open trade yet. It's only an open trade if this comes up and hits my preferred entry price on this. And you might say, well, why, if you expect this to keep dropping, if you expect because of crude oil prices maybe rising again, because of this fear of war, etc., if you expect the Canadian to strengthen because of that, why not just do a market sell? And you could. The reason I'm setting up a pending order is, if you remember, let's look at the larger candles. There's a support level here. And maybe I go to 1-day candles to see it better, or 4-hour candles. 1 day. There we are. So there's the support level we drew. Okay, on the 1-day candle, support, back up. And that's where we are now, just above this support level. So it bounced off that today already. If you expect a potential plunge with this, so you also could say, all right, if it does, instead of going up and hitting my pending order, if it just keeps dropping, then maybe you pick a spot that if it breaks this support level, then you sell, because that would be confirmation of a strong downtrend. So I can go back to the 4-hour candles and say, if it does break the support level and hit 143.70, something like that, I could have a pending order to sell from 143.70, because then it's clear of these supports and might have a ways to drop further. In this example, I didn't do that, but we could. We could set up a pending order to sell from a lower point rather than a higher point. Yes, this webinar is recorded. All of our webinars are recorded and posted on our YouTube channel by the next business day. So you can go through it for repetition's sake to look at some of the ideas and tools that we're using. Any requests on something else we could look at? We could look at crude oil, we can look at gold, we could look at some of the indices, cryptocurrencies, etc. I think we'll take a look at gold. I don't see any requests popping up yet for gold, but let's look. I know it's a commonly traded instrument. Oh, there we are. Several people requesting gold, so I picked the right one to look at first. Yeah, and then we could take a look at Bitcoin. Okay, so we're looking at gold here and some old price levels that I drew. Wow, look how perfect that is. We drew a resistance level up here and said that could be a spot if you wanted to short gold, to wait and be patient that it might go up there. And here it is. It's up at 1908, 1910. We were looking at 1915, actually, 1917, that there's a resistance level up here. So the question is, gold is a safe haven against inflation. And if we're expecting potential continued inflation because of energy prices maybe going up further than they already have, we might see gold break this resistance level. We could easily see gold break this resistance. And where's the next resistance level? On the 1-week candles here, we're talking here, 1960 approximately. We're already above 1900 now. I see a question popping up. Do I think it's best to trade on gold right now? Listen, gold can be part of a diversified portfolio of what you trade on. Is it best to trade on gold right now? It's not for me to tell you yes or no on that. What I see is a strong uptrend on the 1-day candles. It's been bullish. Why? Inflation fears. And specifically since these hostilities have been escalating between Russia and the Ukraine, up has gone energy prices, and up has gone gold along with that inflation. And so it's pushing this resistance level It easily could break it. I'm not saying that you should short gold off of this resistance. It easily could break it with all of the crises situation that's going on. And the next resistance level is at 1960. And then after that, it's up towards 2000 if it breaks 1960. So let's get off the 1 week candles and look at, say, 1 hour candles. And we see that resistance up here. Resistance, resistance, down it comes. And now it's testing the resistance. It hasn't gotten to the resistance level up here yet, okay, at 1915. So that's a strong run up on the 1 hour candles. It's in the midst of a bit of a pullback. That's a bullish movement. It's a strong bullish movement on gold. A possible move on this, technically speaking, let's say you're bullish on gold because of all the fears of inflation, especially because of energy costs that could go up even further with this potential escalating conflict. If you say, let's say you're in the opinion that you think gold will go up, then you have some options on, well, what would you do? Maybe you're patient and you see gold pulling back a bit right now. So perhaps you wait for your price and you say, where's the support level I might like? Could be something like here. As we look down to say, this is a price here that was old resistance, 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 resistance here, some breakthroughs, back down around 1900. So if gold pulls back to 1900, that could be a spot that you're looking to buy from if you're bullish on gold. It's a round number too that could act as support, 1900. It went blowing by it just a few hours back, broke through 1900, and it seems to be trying to pull back down a bit right now. So if you're looking to buy on gold, you could do a pending order, execute when price hits. You could program in 1900 with a take profit up, and this wouldn't even have to break that resistance level. Take profit at 1915. The 1 day candle resistance we looked at was at about 1917. So 1915 with a stop loss, if you do get in at 1900, your stop loss can be down here just below this support at 1890, right? So stop loss at 1885. So that's equal risk reward. Equal risk reward. 75 risk, 75 possible profit. So, and maybe you feel that if you do get that price down at 1900, that the fundamentals are on your side with all the fears of inflation and now fears of war, that maybe gold would bounce back up off of a price like 1900, especially after this bullish run up right here. So you could be excited maybe to try and get a price at 1900 to buy from if that's how you feel about gold right now. I think technically speaking, fundamentally speaking, this even risk reward might make sense. If you can catch a price down at 1900, it could be a favorable price for you with this strategy set up. So now you start to look and you say, in my example, I said I'm willing to risk, what was it in that last trade, 250 or whatever it is, whatever the amount you're willing to risk. Now you take the trade size based on your technical setup. You start to change the trade size to get the possible loss, possible profit that you're looking for. So 0.5 lots gives me 750 possible loss, 0.4, 600, 0.25, 375. So you decide, what do I want for possible profit, possible loss? Okay, 0.2, it's 300 possible profit, 300 possible loss. Maybe you're comfortable with that, but at least you're informed going into it. If I've got, 30,000 in my account and I'm risking 300, okay, 1% risk, right? Or whatever the case may be. Whatever your balance is, whatever percent you want to risk, you're informed here with the risk management tools. And so I might think that that's what I want to do and buy. I also could use AvaProtect. Okay, I could protect by the hour, by the day, and say, you know what, I think this could go flying up or flying down, and instead of setting it up this way with a stop loss, and instead of doing a pending order, I could say, you know what, I think eventually gold will have a huge move. Maybe that's how I feel, but I'm not sure which way this huge move might be. Maybe I think it could go flying down, it could go flying up, but I expect a big move soon. If that's how I felt, then AvaProtect could be the way to go. Could say, you know what, let me give it 2 days protection. Let me protect for 2 days. 0.2 lots. It's going to cost me 205 premium cost, but boy, I could have a huge payout if this goes the right way. If that's how you feel, right? So I set up, in this case, a buy position, 0.2 lots. My take profit, maybe I put up at, let's say, 1,955. That's assuming it breaks that first resistance. That next resistance we saw in the chart, remember on the 1 week candles, was up here on the 1 week candles at 1959, 1960. That's the next resistance level. So maybe you say, okay, over the next 2 days could be escalation of tensions and war. If that happens, gold could go flying up maybe in your mind. So you give it 2 days protection. My only risk is 205.82, and my potential profit, if it goes to this resistance level up here, I'm taking profit just before that, is nearly 1,000 potential profit, almost 5 times what I'm paying for the protection, potential profit. And so there we are. That's an example of using AvaProtect. That's on a market move. Now I don't care if this goes flying $100 an ounce the wrong way. I don't lose anything. I paid my premium for the protection. At the end of the protected time period, if I'm a huge negative floating on the trade, when the protection ends, I get all that negative floating added back, and now I can let the trade keep running. I can close it. I can open a new position. I can add to my position if I think now it'll go the right way. And if it goes flying the right way, then the profit's mine. Lavkesh, you're saying in this case, you'll not be able to get profits if gold does not touch 1960, but is still high. No, it's not true. You can manually close the trade. Let's say it's in profits where you're making, I don't know, $500 on this trade. And you say, okay, I paid 200 and something for the protection. It's in 500 profit. I can manually close the trade early. The protection ends as soon as you manually close the trade. If the protection is still running, if it hasn't reached the 2 days yet. So you don't have to keep the protection running that long. You can manually close. I could close it right now if I wanted to. If gold just spiked up $50 an ounce right now, I can close it 1 minute into the trade. No problem. But I've got peace of mind now on this gold trade for a couple days. And part of what builds into whether I'm going to use a feature like AvaProtect is the fundamental news. That's why we're talking about fundamental news in this webinar. It plays a role in your decision making. And because the fundamental news situation right now is so unpredictable, but leaning towards huge fear and maybe a rush towards safe havens, maybe, that plays into the role that, okay, maybe I take a shot here at a potential large move on gold. And if I'm wrong, my risk is capped at a small percent of my balance. With that premium cost, my risk is capped for that protected time period. And then I have to manage the trade if the protection ends after that. I could add a stop loss or something like that. So just some different ideas with what's going on fundamentally, how you can use these tools within the web trader. Okay, so there was a request for, let's see. I see Euro GBP was requested, but Bitcoin was requested first. Now, I apologize. I know some areas in the world you can't trade cryptocurrencies, like the UK and some other areas. Most of our clients are able to trade the cryptos. I usually don't don't cover them in the webinar because I know some of you can't trade them with us. But it was requested. We'll go ahead. We'll cover Bitcoin. I think it's okay because the strategy concepts are similar. Now, you see, with the cryptocurrencies being considered a riskier instrument, just like the stocks are considered riskier. When there's a lot of fear, you tend to see when the stock market sells off, you also tend to see cryptocurrencies sell off a bit. Not always, not 100% correlation, but you do see a strong relationship there, that when the equities are selling off, when there's fear on the markets, investors tend to get out of the riskier instruments, and so you tend to see a sell-off a bit in the cryptocurrencies as well. And that's what we've seen. Here are the 2-hour candles. We see cryptocurrencies drop, 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 drop. There was a bounce today as the equities were bouncing with hopes of maybe continued talks between Ukraine and Russia. The equities were going up, so too were the cryptocurrencies. Now we see a pullback. The past several hours, we see a pullback now on that. So we see on Bitcoin USD, after the rise, the last 6 hours, a pullback. So what we see now is there may be a support level forming after all the dropping that we've seen in the cryptocurrencies. And you might see it better on different candles. So it's always good to look at the different size candles. And what I see is a support level down here on the 4-hour candles on Bitcoin. Okay, we see support. It bottomed out down here not that long ago with the peak of the fear. And then it found support up here, support, and a bounce again, support. It looks like as the fear is intensifying a bit more, maybe, that it wouldn't take much to see Bitcoin try to come back down towards this support level down here, okay, where it was down here. So if we're looking at where Bitcoin is now, I could see easily this trying to test this support level again down here at 36,259. So that's over 1,000 points down. So if let's say I wanted to sell on this with the fear that's going on, and let's say I want to do a market sell. My take profit I can put down here at 36,270, let's say. My stop loss I can have just above today's high without having to risk that much. So stop loss can be up here. Because obviously this could go bad for you. So let's look at a stop loss above this resistance level here. Resistance, resistance. So just above that, 39,680, let's say, for stop loss. And you take a look and you say, okay, I'm risking a little more than my potential profit. And you could say, you know what? Why don't I use today's high? Instead of this high up here, to limit my risk, I'll say if it breaks today's high, I'm out. Because if truly now the fear is taking over and this is dropping, it probably shouldn't go up and break today's high then. So 39,350, maybe we say, instead of 680, to limit that stop loss a bit. 39,350. I have a few too many zeros. There we are. So now at 39,350, we see that's more equal. And that still gets you above today's high. So if I can ever type the right price, there we are. So I'm risking 151, potential profit 156. Okay, now I change my trade size until I get the risk reward that I'm looking for. So maybe I'm willing to risk about 300, 250, 300, if that's my range that I know I want to risk per trade, or whatever the case may be. You put the lot size that makes sense to you. Maybe I say with this, I'm willing to go 500. So 0.03, And that gets me closer to 500 potential profit and risk, 450-ish. And sell, okay? So I'm kind of in the middle of this resistance and this support. And you say, well, why would you trade from there? And that goes back then to the fundamentals. You say, if I've got equal distance between resistance and support, then how do I choose the direction that makes sense to me? And you lean on the fundamentals in that situation and you say, listen, there's fear on the markets. US dollar has shown some strengthening. Maybe I go with Bitcoin trying to test the support level down here. And the idea with trading is you're not going to be right every time. But if I've got about 50-50 distance to my stop loss compared to my take profit, then how can I come out on top is try to be right a little better than 50% of the time with this type of setup. And if I'm looking at the fundamental news, I'm not going to be right every time. But certainly I hope I can be right better than a flip of the coin. Okay, a monkey can be right 50% of the time, right? So hopefully I can do better than flipping a coin and picking heads or tails. I should with the fundamental news review hopefully be right 55% of the time and wrong maybe 45% of the time. That's what you're hoping for with the whole fundamental news review. That's the idea of doing fundamental analysis. So when you've got a setup where you've got almost equal risk to reward, with those types of trades, you're hoping to be right something better than 50% of the time. And so you're not always setting things up with your stop loss a shorter distance and your take profit a longer distance. Sometimes you're setting up equidistant, if that's the way the chart sets up and if fundamentally it makes sense to you. And we see that this dipped below this little support level here. Support, support, support. It broke below it with this wick. And so the technicals are there showing a downtrend. So as you start to move from the fundamentals that might tell you to sell on this, you start to look at the technical analysis and you say, right now there's a downtrend. If I look at the smaller candles, I see a downtrend. That's what this is, downtrend here. Strong breakthrough here, breaking into a downtrend. So what looks like you're getting in at a low point to sell, when you look at the bigger candles, you say, okay, I'm actually equidistant from my stop loss to my take profit. And the smaller candles are showing a strong downtrend. So selling in a downtrend might make sense as well. So sometimes you're not always selling from the high point. Sometimes you sell from somewhat of a downtrend that already started, not always selling from the highest point. And so we're combining a bit of technical strategy, selling in a downtrend after support levels have been broken on the smaller candles. And then in the bigger candle view, when we're looking instead of at 15-minute candles, 2-hour and 4-hour candles, we see the price levels better and say, okay, it's not such a bad entry point to sell from. Okay, and by the way, you could be buying on Bitcoin right now if that's your opinion. Again, you just got to be right with this type of setup, better than 50%, and you should be profiting. Any questions, comments before we end things? We've been going for almost an hour. I know there were some requests to look at some other instruments. I apologize. We haven't had time. I promise you that if fear keeps intensifying, you're going to see similar movements on the equities. High fear tends to cause big movements on lots of instruments. And I can't promise you the equities will drop, but I promise you they will respond with larger movements the larger the fear is, okay? And in general, US 30 that's being requested to look at and some other instruments, equities, when there's a lot of fear, they tend to drop. Not always, but they tend to drop. All right, everybody, thank you for joining. Thank you, Natalie, for the kind words. Wishing you all the best over there in Russia. You probably have people, if you're in Russia, that you know in Ukraine as well. I'm wishing them the best also. Unfortunately, the people get in the middle of a lot of these conflicts, innocent people. Any of you out there that are at the webinar that are in those locations, I wish you safety and I wish you all the best. All right, everybody. Bye for now. Good luck with your trading.